a quiet start to the week as the benchmark holds above the 25,600 mark, led by banking heavyweights like HDFC Bank, ICICI Bank, while IT stocks weigh on the sentiment. Broader indices trade mixed with mid-caps under pressure.
After the US Supreme Court struck down Trump-era tariffs, Trump invoked Section 122 of the 1974 Trade Act to impose a temporary 15% levy on all partners. From India, tariff uncertainty has delayed trade talks as both sides reassess the deal framework.
UPL has approved a major restructuring to create two listed entities separating its global crop protection business. The move aims to unlock value and enable independent fundraising through brokerages remain divided on near-term benefits.
And IDFC First Bank is down over 15% after uncovering a 590 crore fraud at its Chandigarh branch, prompting the Haryana government to suspend dealings with the bank and EU small finance banks. CEO V. Vaidyanathan says it is an isolated case with audits and recovery underway.
Forpen Labs jumped 14% after bagging an 800 crores global CDMO mandate. CIE Auto soared on a target hike by Motilal Oswal, while Ashoka Buildcon surges after a 1100 crore Maharashtra contract.
Hello and welcome. You tune in to Buy Now Sell Now. I'm Ankita Saxena, and with me is going to be my colleague Kavita Thaplayal. In the next 1 hour, we'll get all your stock-specific questions answered. So keep writing into us and we'll get them answered. But first up, let's take stock of how the market is shaping up at this juncture. Well, in the morning, we did see a good start, responding to the new tariffs of 15%. We did see a good start coming in there, but we have given up those morning gains. We are down actually 87 odd points from the day's high. Nifty is below the 25,700 levels that we were managing to hold. So right now 25,681 is where Nifty is at. Still up an uptick of 100 odd points on the Nifty. As far as Nifty Bank is concerned, Nifty Bank started on the back foot, though it did tick up. We do see that also declining 252 odd points from the day's high, but nonetheless it is managing to hold out in the green right now with gains of 65 odd points is Nifty Bank as well. Now remember, Nifty Bank was largely pulled down by IDFC First and EU Small Finance Bank on the back of that big fraud of almost 500 odd crores coming in. In fact, EU Small Finance Bank, that was down 10% in the trading session in the morning. There it is down 15.5% now. Though the bank has stated that no fraud of financial, as far as AU Small Finance Bank is concerned, that said that no fraud or financial impact, has taken place. So AU Financial Bank, despite the clarification coming in, it is still trading down with cuts of more than 6.5%. Lastly, the market breadth seems to be decent as of now. Even Steven is what I would say. But let's go across to my colleague Sajid, who's standing by with a snapshot of the FNO verse. Sajid, tell us, what does the FNO universe look like?
Thank you, Ankita. There is an FNO update coming up for you here. If you look at the Nifty futures today, the Nifty futures is trading at a slight premium as we speak. Followed, if it's the premium is up nearly 2 points or so, and the open interest is up nearly 0.8% there. So if going into FNO snapshot for the Nifty Bank, we have the Nifty Bank open interest up nearly 5.34%, and there is a rollover happening to the next month, and we're seeing the premium at nearly 15 odd points for the Nifty Bank. If you look at the futures gainers today, you have Indian Bank, which has been up today 3.4%. The stock is up and the futures is up there. The Union Bank is up nearly 2.86%, and the BPCL is up 2.68%. In the futures losers, you have IDFC First down nearly 15%. Now that's off the day's low. UPL is up nearly 13.75% after the restructuring, which seems to be against some of the minority shareholders, and there is a holding company discount now coming up for UPL there, and AU Small Finance Bank again down 6.5% on the back of the Haryana issue which is there. let's look at what's happening in the open interest losers there. You have Supreme Industries where the short covering has been seen and open interest is down nearly 18.5%. Muthoot Finance, we have seen a short covering happening with open interest down nearly more than 14.5%. And AU Small Finance Bank, there's a long unwinding that is happening there in that stock there. On the options open interest change, we have a lot of put writing happening at 25,700 in the current month. We have a call activity coming up in 25,800 and 25,900, with 26,000 being a strong resistance for the Nifty going forward. So that that resistance continues to be there. And in Nifty Bank, let's get to what the constituents of Nifty Bank is doing, because this is something which is proprietary to us, and where you can see what each of the stock is doing there. You have a long build up coming up in HDFC Bank, ICICI Bank and Axis, and SBI also. There's a short covering which is there, while there is a long unwinding happening in IndusInd Bank and AU Small Finance Bank, where the open interest is down nearly 13.4% there. The most active, of course, today is IDFC Bank, IDFC First Bank, with the 70 March put, where the premium is up nearly 4 rupees at 4.19. So you can imagine from 15 odd paisa it has gone up to 4.19 there. The open interest position has fallen by is down by nearly 13% for IDFC Bank. And in the call, if you look at IDFC 70 call, which is again active, the premium has fallen by 8.6. It's come down to 5 rupees there, and with open interest again falling by nearly 13 odd percent in today's trade. So that's an update from the FNO desk, and you're watching FNO 360.
All right, so that's the update on FNO 360, but then let's move on and let's begin with buy now, sell now. Just in case you haven't yet noted down our numbers, let's just quickly flash our WhatsApp number on the screen where you can send across your questions. Write the name of the stock, the price at which you bought it, and the timeline for which you want to hold on to it. We'll give you a technical or a fundamental view from our experts that have joined us live. So that's the number flashing on the screen, 865-797-4571, where you can send across your questions and you can get the answers live right now. All right, joining us on the panel today are Lancelot Dicona, Chief Investment Officer, ValueX Wealth Connect, and Jigar S. Patel, Senior Manager, Technical Research Analyst, Anand Rathi Shares and Stockbrokers. Hi, morning and welcome to the show, gentlemen. Before I dive into our viewer queries, Lancelot, a quick fundamental view on the markets. Do you think it's likely to lose all the steam that we saw initially in the opening?
I think, given the geopolitical situation, we are likely to see some more volatility. But if one looks at the economy as well as the fundamental data that has come in based, the Q3 results, we've seen that there is, an improvement in certain sectors, and you will see certain companies, do better than others, because growth is coming back in those sectors. And these could be, things like FMCG, auto ancillaries, power, pharma. So there is, a good amount of growth coming back. So in terms of the valuations of the market, I think they would be relatively reasonable at these levels. And so one should look at your asset allocation and maybe decide how much exposure you need to equity, and then look at taking an investment in the market.
All right. Thank you so much for that, Lancelot. But let's get started with all the questions then. So the first question is coming from Bala, who's writing in from Chennai. He says he wants to ask this question to Lancelot. He says, is India Glycols and Amara Raja good buys at the current price? If not, suggest an alternative. So for the current, I think he wants a fundamental view also, and I think that he wants the entry price also. So first, let me come to you, Lancelot, for Amara Raja and for India Glycols.
So Amara Raja is, basically trading at about 20 times earnings. Quarterly numbers have been fair. There has been some improvement in terms of the quarterly numbers, and we are seeing, the growth will come back for the stock. But there has been a little bit of concern in terms of the, the margins that we expect over the longer term, because, it's a little difficult to pass on the increasing commodity costs that would impact them going forward. So margins would be a bit of a concern, but if you bought this at a lower price and you're looking at a long-term option, then one can look at continuing to hold the stock.
So, Raja, that's the recommendation coming in from Lancelot. But then we're also joined by a live viewer, Kusuma from Hyderabad. Hi, good morning. How are you doing today?
Good morning, madam. I am Guzma from Hyderabad.
Sure.
I am holding Wonderla shares at an average price of 788 with a loss of 40%.
Okay.
Can I hold it for long term, ma'am? 3 to 4 years?
3 to 4 years is your time duration. Sure, let's just get a fundamental take. You're in deep losses there, Lancelot. How can we help Kusuma?
So I think, a lot of these hospitality and travel stocks had risen considerably, during their period. And we have seen, some of them also show a good amount of traction. So while business appears to be improving, business conditions, the valuations are a little bit on the higher side. And because she's bought it at a much higher price and now is sitting with a little bit of negative sync, I think it may be a good idea to switch to, as the industry sort of stabilizes and the market stabilize as far as the travel and hospitality markets are concerned, it may be a better option to look at some of the companies that are better placed financially to take advantage of this improvement.
All right. I hope, Kusuma, your question was answered there. But let's move on to a query coming in on WhatsApp now. This is Pratik who's writing in from Mumbai. He says he's bought 700 shares of Varun Beverages at an average price of 585. What should be his strategy? So, see, he's clearly sitting at a loss. Jigar, let me come to you here. What should be his strategy? He's bought it at 585, and clearly Varun Beverages, that has been in a consolidative mode for the last 1 year. What should be his strategy going forward?
See, currently, in terms of VBL, the chart has been, showing some negativity, but overall, the bottom of 430, 440 odd zone, which is a historical level from March 2025. So I would suggest that this is a very massive support and a very crucial support. So at this current juncture, based on daily chart, I would recommend to add more at this level. And overall, the short-term price movement and target is expected near 500, 510 within next for 2 to 3 months. And the stop loss would be kept below 430 on daily closing basis.
All right, stop loss below 430 on daily basis. That's the recommendation on Varun Beverages from Jigar. Let's move on. The next question is coming in from Mr. Sriram Raghuraman from Chennai, and he's holding ABP 10 shares. Average price is 914. He wants a fundamental view on the stock. Lancelot, what's the take?
With good numbers, and there's very strong addition to their order book, and we should expect that given the kind of orders they are receiving from on a capex cycle of very very many corporates, both government as well as private, the long term view for the stock is positive. However, in the short term, it has risen significantly, and on a valuation perspective, maybe a little bit expensive to accumulate at this price. But any decline should be a good opportunity to add to this stock for the long term.
So that's the view coming in on ABB. Let's move on to the next question coming from Neelam Pandey, who's writing in from Mumbai. She says she has 600 shares of Bank of India that she's purchased at 75 rupees. She wants to know if this is the right time to book profits, or should she hold for some more time? She's a long-term investor. Lancelot, let me come to you. Bank of India, she is clearly sitting at a profit. What should be her strategy? Do you see more up move for the counter, and should she stick by it for longer?
So, while most of the banks and financial sectors will benefit from the easing of the interest rates and, and the additional liquidity being provided by RBI, plus there's a significant credit growth expected, from these banks. So that should be positive for Bank of India as well. But if you look at in terms of the various metrics that you would compare banks with, I think some of the private sector banks would be better poised to, for higher growth as compared to Bank of India, or even maybe State Bank of India, which has introduced a lot of technology into its product offering, would be a better option to invest in. So maybe it's a good idea to book profits, move to some of the stronger and more proven banks.
And let's take this question on Eternal. So this is by Gautam, and he's from the US, and he's got 3,000 shares of Eternal at 290, and he wants to know, should he hold or sell? What's going to be the stop loss for a short-term hold, and what's the immediate resistance at this point in time? Jigar, what's the take?
See, currently on Eternal, the resistance has been seen near 300-290 zone, but overall, again, the bounce which we saw on 28 Jan and later on we saw pullback, but there is a possibility of double bottom structure near 265, 260 odd zone. So I would recommend him to hold as of now. And if there is a testing of 260 levels, then definitely he should at this level, because there are divergence seen on daily chart and keeping a stop loss of below 250, and overall the bounce is expected near 300, 305 levels within next 1 to 2 months.
So a hold call coming in on Eternal for now, but before we answer more questions, let's take an exclusive roundup of the week's key developments from Maharashtra in a Maharashtra 360. Let's take a look first.
From major infrastructure milestones and global climate conversations to technology-led transformation, urban mobility planning and governance reviews, here's a comprehensive look at the key developments shaping Maharashtra this week. This is Maharashtra 360. A major logistics boost is set to take shape at Navi Mumbai International Airport. CM Fadnavis performed the groundbreaking for a new FedEx cargo hub, calling it a key milestone for Maharashtra's logistics ecosystem. The facility will strengthen Western India's cargo capacity, improve efficiency, and reinforce global investor confidence. The 2,500 crore rupee project includes over $250 million from FedEx for a fully automated 3 lakh square feet hub. It will start with 500,000 metric tons capacity, expandable to 3.25 million tons, and generate 6,000 plus jobs. The hub will enhance supply chain efficiency and global connectivity. Mumbai hosted the 3-day Global Economic Cooperation 2026 Summit, bringing policymakers and investors together in a multipolar world. In his inaugural address, CM Fadnavis positioned Mumbai as a gateway for global capital and highlighted Maharashtra's economic stability and investment appeal. CM Fadnavis outlined Maharashtra's strategic vision. Discussions focused on stability in a multipolar economy. He stressed trust-based partnerships and positioned Mumbai and Maharashtra as gateways for long-term global capital. Maharashtra has launched the country's first AI Living Lab to help MSMEs adopt advanced technology for operational challenges. Skill Development Minister Mangal Prabhat Lodha inaugurated the facility at Ratan Tata Maharashtra State Skills University, developed with German collaboration. The AI Living Lab at RTMSSU, supported by Germany, will serve as a collaborative platform for real-world challenges in automation, manufacturing, and digital systems. 5 German companies will participate initially, along with Accurate Industrial Controls, Latex Electrical, Ashwini Magnets, and PMT machines. The lab will integrate students, faculty, and industry to deliver applied AI solutions and boost technological self-reliance. Deputy CM Eknath Shinde has approved a 48,000 crore rupees surplus MMRDA budget, the first in 9 years. About 75% will fund metro expansion, flyovers, roads, tunnels and bypasses to ease congestion. He also stressed water planning through the Poshir and Shilar dams, along with focus on environment and jobs. The 337-kilometer combined mobility plan includes 13,838 crore rupees for metro expansion, along with pod taxis, boat taxis, and seamless multimodal connectivity. Double-decker flyovers and underground corridors are also part of the roadmap. Following recent accidents, structural safety audits have been ordered, while slum rehabilitation will be pushed, including 17,000 houses at Ramabai Ambedkar Nagar. Deputy CM and Minority Welfare Minister Sunitra Pawar reviewed the Minorities Welfare Department, reaffirming commitment to social, economic and cultural upliftment. She directed transparent fund distribution and ordered an inquiry into irregular minority status certificates, warning of strict action. Pawar emphasized effective rollout of scholarship schemes, hostels and loan programs, including Maulana Azad Economic Development Corporation loans enhanced from 5 lakh to 20 lakh rupees. The Deputy CM ordered rapid completion of minority hostels and strengthening of Urdu houses in Nanded, Solapur and Malegaon. She directed urgent filling of 179 Waqf Board posts, 25 tribunal posts and 10 Hajj committee posts. Planning for the 350th Guru Tegh Bahadur Shahidi Samagam at Kharghar is to be fast-tracked with full administrative approvals. Hind Di Chadar, the timeless legacy of Shri Guru Tegh Bahadur Sahib Ji, whose supreme sacrifice for religious freedom, tolerance and humanity remains a guiding light. Marking the 350th Shahidi Samagam, Maharashtra has resolved to carry his teachings to every section of society under the leadership of CM Fadnavis. The main commemorative ceremony will be held on February 28th and March 1st, with PM Modi and Union Home Minister Amit Shah expected to attend. And those were all the updates we could pack for you in this edition of Maharashtra 360. Until next time, take care.
Hi, welcome back. You're watching Buy Now, Sell Now, and we are answering your stock-specific questions live. Just in case you haven't yet noted down, let's just quickly flash our WhatsApp number, and you can send across your stock-specific questions. Our experts are live with us, and we will get your questions answered. 865-797-4571, the number where you can reach out right now and send across your questions. So, Lancelot Dikuna and Jigar Patel, both of our guests are live with us. And let's take this question. This is from Mr. Y. Koteshwara Rao from Hyderabad, and he's a long-term investor. Okay, so Lancelot, this is for you then. FMCG stocks, he's been holding for more than 5 years. HUL, Nestle, Tata Consumer. HUL bought at 2200, Nestle 1331, Tata Consumer 390. And he's also got SBI, Poonawalla, Rainbow, Kim's Hospital, Indian Hotels. Okay, so he wants to shift from FMCG counters to the names that I just said, you know, SBI, Poonawalla, Rainbow, Kim's Hospital or Indian Hotels. Long-term investor holding FMCG since last 5 years, but now he wants to move away from this particular sector. Lancelot, what's going to be your take and your choices also where he can shift his money?
I think, the FMCG sector had been struggling for the last 3-4 years, especially because of higher inflation, high raw material cost, falling demand. So this had hit their, their both return ratios as well as revenue growth. But if you look at the last quarter numbers, most of the FMCG companies have expressed that they have seen some amount of green shoots in terms of demand coming back. And that could very well flow through towards the, over the next full year. So I think if one has a little bit of more patience, you can look at holding FMCG companies that you are holding, because over the next 12 to 18 months, you would get the good results would actually drive share prices as well. And that would give you a better, some better returns going forward. However, if maybe you feel that this is a large portion of your portfolio and one wants to exit part of the portfolio or book some profits and look for additional areas of investment, yes, financial services is an area which will do better. But I would stick to maybe a company like SBI as well as maybe some of the larger NBFCs. You have Cholamandalam Investments. If you're looking at NBFC space, the exchanges will continue to grow from a long-term perspective. So you have, the MCX, BSE. These are some, and also the asset management businesses. So these are some of the companies one can look at adding to your portfolio to provide you with growth as well as diversification.
All right, thank you for that on SBI. But let's move on to the next question that's coming in from, this one's coming in from Shaurya, who's writing in from Gurgaon. He says he holds 50 shares of Infosys at a buying price of 1,352. He says, should he hold it for the next 6 months? Jigar, let me come to you for this. Infosys, he's been holding, if you can pull up the charts for Infosys, he's been holding at 1,352. So as of now, I mean, he's not really sitting at much of a loss, but what should he do for the next 6 months? I mean, just today we have had a downgrade that's coming in for the IT pack by Jeffries. But what would be your view for the IT pack in the next 6 months, given the pressure from AI?
See, in terms of Infosys, again, we had a massive selling of approximately 9% in current ongoing month. But overall, if we look at a bigger picture, the historical support is seen near 1300 till 1250, which is coming from 2023 March. So I would suggest him that this is a vertical fall in Infosys, and company like Infosys, TCS, this kind of fall are not going to be seen for forever. So we are expecting a consolidation around 1220 from till 1350. So approximately 100 points consolidation. So currently I would suggest him to add more at this level, and even at 1300, keeping a stop loss of below 1200. Overall bounce can be seen till 1475, 1500 within next 2 to 3 months.
So that's the entire take on the tech sector. But then we've got other query coming in from Bangalore, and this is Shri who's writing. Moscow top bought at 2,500. This is a short-term query, Jigar. I would like you to answer this. 100 shares of Moscow at 2500, and he wants a 1-month target from you with a stop loss.
See, again, in Mazgaon Dock, there is a continuous lower low kind of formation. But if we look at since last 1.5 months, the low of around 2300 has been saved, and currently we are above that, this above 2300. And overall, the indicators are indicating some negativity. But overall, the support is seen from 2025 March consolidation zone. So I would suggest him to add near 2280 levels. And overall, the target would be seen near 2600, and the stop loss can be kept below 2200 on daily closing basis.
Right. On that note, we'll quickly slip into a short break, come back and get all your questions answered. So don't stop sending in the queries. Stay tuned. Welcome back. You tune into Bayana Salam. I'm Kita Saxena, and this is the show where we get all your questions answered. And for now, the number is flashing on top of your screen, and we also have a live caller who's joining on. Balan from Mumbai is now joining us. Hi, good morning, Balan. Tell us what's your question.
Hi, good morning. First of all, congratulations to ET now, Buy Now, Sell Now team for the fantastic job they are doing to retail consumers like me.
Thank you so
I
much.
I benefited a lot.
Thank you, Balan. Thank you for being a regular viewer.
My question is, I hold IRCTC, Birlasoft, and Paradeep Phosphate for quite some time, and there are no great returns. Should I sell and move to some other large cap or mid cap? Please suggest. Thank you.
All right. Thank you so much for your question, Balan. Let me come to you for this Lancelot. He has IRCTC, Pradeep Phosphate, and Birlasoft. Clearly, he's not getting the returns, his desired returns. So what should he do? Should he wait? Should he sell? And if yes, then perhaps what are the counters that he can enter?
So I think, if you look at IRCTC, while the business has been growing because they've been focused on the railways, and, they are basically catering to all the railway, ticketing and various services that are being provided. The price earning multiple is trading at almost 37 times earnings, and the growth is actually restricted by the kind of capacity addition that you may see, and that does mean that going forward you may not see that kind of high returns in order to which justifies a high valuation. So it may be in a long term, maybe a price correction, because till such time the returns can be increased from the earnings, valuations will remain stretched. So given that background, one can look at exiting. And even if you look at Paradeep Phosphates or the others, both are expensively placed. There's also a bit of negative sentiment as far as the phosphate is concerned, Paradeep Phosphate, because of the imports that are being permitted on the fertilizer front. So I think it's better to move out of these stocks and look at areas over the next 3 years which will benefit. And because of an improved earnings growth, one can look at investing there. So companies could be in the capital goods space, like you have, like we discussed, ABB earlier. Maybe a correction in the price would be an opportunity to buy into the stock for a long term. Other companies could be SKF Industrial, which is also in the automotive, in the industrial bearings segment. So that can be another good option to look at where valuations are reasonable. And some of the banking and banking stocks or even the exchanges, they would benefit over the next 2-3 years. So one can look at, adding some of these instead of, the current stocks that he holds.
All right, so that's a lot of options and recommendations given to you. But then let's move on. And this is a very interesting question coming in from Mr. Lakshmanan. He's a senior citizen from Bangalore. And okay, so I think, Lancelot, your help will be needed because he just want to reshuffle his exposure in banking. Okay, so he's bought almost, he says 25% of his direct equity portfolio is of banking. He's got HDFC Bank 3.6 lakhs, SBI almost more than 1 lakhs. He's invested small amounts in Maharashtra, Canara Bank, PNB, Federal. So a lot of banks, Indian Bank, Kotak, Union. Overall costing is 5.25 lakhs. So he wants to change this particular allocation and exit from where is recommended is something that he's asking you. And he also has invested in IT Scripts, TCS, HCL Tech Mahindra, Wipro. And they are not doing well, so he's confused about that also. So, okay, what's going to be your take? How can he first filter out his banking exposure, Lancelot?
Right. So I think, this is probably a time to consolidate banking exposure and move from, stocks that he's holding, which are not that strong in terms of growth or not that competitive as far as the other banks. So I think SBI, HDFC Bank, maybe an ICICI Bank on the private sector side would be three good banks which he can sell off some of the banking stocks and add to these so that he has consolidation there. However, if banking as a percentage of his overall asset, equity portfolio is at a higher percentage, then obviously he should look at even reducing the overall exposure a little bit. So it cannot be very high as a percentage. It cannot be like 30-40% only banking. And in that case, you can look at moving into some of the exchanges like, the MCX, you have BSE, which will give you good returns over the next 2-3 years as you see revenues growing and profitability growing with these companies. So I think that's something that can be done within the banking space. And if you want to move out, as far as IT is concerned, if you do not have a large exposure, like if your exposure is, let's say 5% or 3% or 8% of your portfolio, one can continue to wait because I do believe that over the longer term, IT will again re-engineer themselves in order to become more AI driven. And yes, they will restructure their business model as well as their employee costs, etc., and then emerge more focused and more profitable. So maybe this cycle may take a year or two or maybe 3 years to happen. And during that period, if these stocks do go down to very low levels, that could be an opportunity for some bottom fishing in terms of adding to the portfolio. If you do have a large exposure of IT, then maybe it's wise to cut or reduce exposure now and keep some cash, for future opportunities.
All right, that was the last question for the day. Lancelot and Jigar, thank you so much for taking the time out and coming on our show and answering all our stock questions. We'll let you go on that note, and it's time for a quick breather. Don't go anywhere because after the break, we are coming back with the management of Paras Defense. So stay tuned.
Hi, welcome back, and let's put the spotlight on India's defense sector. Let's analyze India's defense push, and we'll be talking to Paras Defense, and let's analyze demand traction within the defense space, new product offerings within the defense sector, and for the company is further diversification on the cards. What's the revenue targets from defense exports, and what synergies from Himanshi Thermal acquisitions coming up? Also opportunities from budget announcements. The stock currently is down almost more than 1%. But then we are joined by Mr. Amit Mahajan, Director, Paras Defense and Space Technologies. Amit, hi. Morning. Welcome to the show. Okay, so from a defense industry standpoint, what are the new product offerings in this particular space, and how does the demand traction looks like to you?
From a defense technology standpoint, currently, as we've seen over the past few months, one technology segment that has taken limelight is air defense. So air defense is a very complex, you can say, environment. And for this, there are multiple technologies are at play. One is interception or detection of an aerial target to identification of that, recognizing that target, and then intercepting that target. So these are the areas that are covered by air defense. Now, what happens is the problem is why it is complex is because the aerial targets today vary from a very big aircraft to a very, very small drone. And that's what makes the whole environment very challenging and very interesting at the same time. So there is a layered strategy for air defense, and you would find Paras contributing to almost all layers of the air defense requirements.
Right, Mr. Mahajan, also the company has recently formed a subsidiary linked to the avionics space. Is this a step forward further in the further diversification, and how does it impact your product mix?
The company intends to start two subsidiaries. One is into avionics and one is into semiconductors. We wouldn't call it as diversification because our intent of forming both these subsidiaries are in the same supply value as the same value chain as we are looking at. So with avionics, we will be expanding our footprint into avionics. We'll be able to bring in technologies, manufacture here in India, and then support the avionic technologies, which we are in a small way doing it today as well. On the semiconductor side, we are looking at doing a very high performance advanced packaging technology here. And yes, it's a lower in value chain, but we feel this will have a huge impact when it comes to self-reliance in technology, and also will give us the necessary scale to become an exporter of certain technologies beyond just the Indian market.
All right, Amit, also with India promoting defense exports, does Paras Defense anticipate significant revenue from its international clients?
Yes, the company today, about a couple of years back, I always used to keep saying that export is our plan B. But as the natural business progresses, the more and more domestic business you do, the more quantities you start delivering to your domestic customers, your quality and your production readiness becomes international ready. Along with that, your credibility in terms of supplies and in terms of a partner for a foreign customer becomes better and better. Also, what has happened about a year back also gave a lot of confidence worldwide that Indian technologies are now field proven. This gives a lot of motivation for the foreign customer to come to India to procure technologies grown in India. We are a benefactor of that. We are expecting good amount of revenues coming in from exports. May not be as much as domestic, but it will grow over a period of time, much better than what we've seen in the past years. And this curve is likely to improve in the coming years.
Also, Mr. Mahajan, the company has recently acquired 49% stake in Himanshi Thermal, which caters to the space and the airborne applications. Moreover, Himanshi Thermal has nil turnover. Is this transaction margin accretive, and what potential synergies do you anticipate?
So this is in line with our MechTech thermal. It's the same technology, and the reason for the acquiring stake is only such that we can expand and establish infrastructure under this, and we should be able to cater to sizable demand not only in the defense but also in the space sector when it comes to thermal management.
All right, Amit, recently the budget gave a strong impetus to the semiconductor space, and India has entered into certain coalitions at a global level as well. Now, in that direction, what's your outlook on the semiconductor space?
So semiconductor space is a very, very interesting technology to enter into, like a few rounds going on as to who should enter into semiconductors, and the answer is everyone, because there is huge amount of push to get into this technology. There is a good amount of support which is available to, and incentives available to get into this technology. So if you are serious about self-reliance, you have to be in semiconductors. Like there are global coalitions happening, so is Paras looking at a coalition to bring in technology of the 2.5D or 3D advanced packaging, with which we should be able to cater to first optics, which is our core forte, and then expand beyond optics to AI, beyond high performance embedded computing, and then also explore other markets. This not only for domestic requirement, but also an extremely potent export potential coming out of this particular infrastructure.
All right, Mr. Mahajan, on that note, thank you so much for taking the time out, joining us on the show. It was a pleasure to have you. And well, with that, it's a wrap on this edition of Buy Now, Sell Now. Kavit and I will be taking a leave. Thank you so much for tuning in.